Check, please.
Welcome back to Everything Money. In this video, we are going to compare Pepsi versus Coke. Pepsi, Paul, you know, they sponsor the Super Bowl, yet nobody drinks it. Mountain Dew is incredible, and you and I are completely 100% addicted to Coke Zero. We'll talk all about this and the financials and more in this video. We'll use our software and show you what you should be paying for these companies moving forward, and Mo will show you how to trade both these companies if you're into day trading or long-term trading. I bring your questions about Pepsi and Coke to a couple guys that own and operate over $100 million in real estate, multiple businesses upstairs, you know about them, and stocks, and they'll provide you and I with the mindset and guidance on how to invest. Paul, take it away. You know I love you.
Thank you, Seth. That was the fastest I've ever heard Seth speak or do anything in his entire life. I'm very proud of him.
That was dope. Yeah.
His PhD took him 12 years. And how long did your PhD take?
Well, I was there for 6 at Ohio State.
Okay.
And I was dragging it, but I wasn't incredibly. I wasn't.
So at Ohio State, is it just basically coloring in a bunch of pages with a bunch of like letters on them? Although the other day in Mexico, you pulled up. What'd you pull up for him? You pull up something, he got the name right. You showed him like a organic molecule thing.
Yeah, chemical
compound, and Seth got it right. I was very impressed.
There we go.
So guys, first off, before we go further, follow us on Instagram, Everything Money Investing. We have over 6,000 subscribers. It's going gangbusters. Please follow us personally as well, Seth, Mo, and I. So guys, Pepsi versus Coke. This is no exaggeration. I drink between 6 and 9 Coke Zeros a day.
Nope, that's true.
I'm addicted. I love it. I will not eat unless there's a Coke Zero in front of me.
Nope. That's
right?
not possible. Yes. I mean,
literally, if I'm sitting there at meal and there's a full
food.
plate, there's like this, I'm like, I'm waiting for my drink.
When we go out to nice restaurants, I whisper to the waitress, I said, this guy, he likes a tip and well, but if his Coke Zero drops below 50% in his glass, you got to make a move, baby. If something's got to give. You got to pour this man more Coke Zero.
You have to.
Keep going.
But I tip very well when they do it. So, can I give a little anecdotal story?
Please do.
I went to Chicago once and to have dinner with 2 friends, and we went to RPM. Went to RPM. We sat down at the table. My friends ordered alcohol. I said, hey, do you have Coke Zero? Like, we don't. I said, okay, I'll take a Diet Coke. Sounds great. A few minutes pass by. They bring the alcoholic beverages up, and I'm like, where's my drink? Like, this is a Diet Coke. It's very simple. How'd you not bring mine?
Just
the guy's like,
it.
the Diet Coke's coming.
Okay.
Waiter says Diet Coke's coming. So I said, okay. Finally, the drink comes. Guys, this gentleman sent one of the busboys down the street to the Walgreens and bought me 2 Coke Zeros. I tipped him 50% on an RPM meal. RPM, that ain't cheap. Because to me, it was like, wow, this guy cared so much about me having a good experience. And I tell the story to every single person. Now, 20,000 people on YouTube are going to hear this. RPM Chicago, they took care of me. I love them. So, Pepsi versus Coke. What I'm going to do here is we're going to use our software. We're not going to do the entire 8 pillars. We're going to go to the 8 pillars tool that'll actually show you all the 8 pillars of the company, and we'll go talk to them out individually. But Pepsi versus Coke, I think we know which one's the dominant player. Coke definitely is. So let's go to our 8 pillars tool. First, we'll start with Pepsi. I said Pepsi. Here's the company's stock price. Wow, look at this. Since 1987, $6 a share to $175 a share. All right, 8 pillars tool, tab. All right, guys. So they're a little overpriced on the 5-year PE. We want under 22.5. They're at 30.5. They have a great return on invested capital, great revenue growth, great net income growth. Shares outstanding, they're buying back shares, guys. This is super important. This is the silent killer in stocks. If a company has 10 shares outstanding and you own 1, you own 10% of the business. If they buy back 2 shares, you still own 1 share, but now it's split amongst 8. You now own 12.5% of the business. They're making you a larger owner of the business by buying back shares, and that's what Pepsi is doing right here. That's incredible. They have a little bit of debt, 8.2 times their 5-year free cash flow. We want it under 5. So one of the things I suggest is make sure you do some investigation in that debt number. What comprises this debt number? Okay, cash flow growth a little bit down $300 million over the last 5 years. We'll take a look at that because I think cash flow is the lifeblood of the company. But also their price to free cash flow is also very high. So right here, I'm looking at this. They have a dividend yield. Let's look at this. They have a dividend. They pay 2.4%, which is $5.7 billion. Oh, I don't like this, Sethy. Why don't I like this? Take a look at this.
Can they afford it? Oh, way too much of their free cash, baby.
Guys, their free cash flow is only 6.3 over the last 5 years. They're paying out $5.7 billion a year. That's a lot. We like to see it under half, at least under half. Most times a quarter to a third of the free cash flow going out in dividends. This is big. Now, they might be doing that to appeal to investors because Coke is the number 1 company, et cetera. Okay? So let me take a quick look. Look at the income statement and get some general ideas of what's going on here. All right. Pepsi, 6.3 times. Coke, 8.2 times. 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 we're seeing pretty flat revenue from 2012 to 2020, and then a big jump up last year. Let's see their cash flow statement. All right. Okay, so their cash flow statement of the last, remember guys, cash flow, free cash flow is cash from operations, less their capital expenditures. You can do 5 things with that. Buy back, pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back in yourself. It's really what I care about most in a business. It's been pretty stagnant the last 5 years. I'm fine with that. It shows consistency. But let's go see Coke right now. Should we run let's run stock analyzer tool first, actually, guys. We created a stock analyzer tool because every company, every investment's the present value of our future cash flow. We don't know the future. All we can do is make assumptions about the future, and the stock analyzer tool takes those assumptions and tells us the price we should pay for the company today. So, stock analyzer tool, I'm going to do a 10-year analysis on Pepsi. Revenue growth. Last 10 years, here are the 1, 5, and 10 years numbers. I'm going to go low. I'm going to go 2, 4, and 6% revenue growth. I don't think 6% is possible. Yeah, it's not possible. What are you going to do?
I went -101.
Oh, I don't think Pepsi. I think as the world gets larger and larger.
So I will say, if you go and look at Coke, now I haven't looked at their financials. Their 10 years -2.5% revenue growth.
Well, they might have sold off some things.
That's what I'm saying.
I think they sold off some divisions. So let's look at the cash flow statement and the acquisitions and dispositions. Oh, see, look at Pepsi.
What happened?
They sold off. Oh no, they bought. Ooh, that's bad. Yeah. Maybe you're right, Mo. Actually, Mo, maybe you're right. So, guys, what I did there was I went through our cash flow statement. I looked at the acquisition and dispositions. In the last 3 years, they've made $10 billion in acquisitions, and still their revenue isn't up a ton over the last 10 years. So maybe Mo's right. Maybe I need to do something more conservative. -1, 1, and 3. How about that?
Sure.
Profit margin. It's pretty consistent. 10, 10.5, 11. Free cash flow margin. I'm going to do 9, 9.5, and 10. PE. Guys, 13, 15, 17. This is a big company without a lot of growth. You can't pay a huge premium for them. And like usual, 12.5% return on my money, because you can buy an ETF and get 9 or 10%. So if you want to buy an individual stock with margin of safety, you got to put that in there with a higher return. We hit the analyze button. Sethi, look at this.
Oh, yuck.
A low end of in the 40s, a high end in the 70s, and somewhere in the middle is probably where it's getting up being. Now, guys, the stock is currently at 174. It's double. But look at their PE. It's 30. Without any growth in this company for the last 10 years. I look at it going, where's the growth coming? If you believe it's growing, pay out. If you believe it's growing a lot, and we have videos on this, higher growth. People always say Paul doesn't get growth. No, I don't overpay for growth. Growth is one of the most important parts of any company. You pay more for a faster growing company. 2 companies side by side, exactly equal, except for one thing different, growth rate, you're going to pay more for the higher growth company. That's a fact. So this doesn't actually sound that unreasonable. Now, let's look at my revenue growth assumptions. Let's say I go 3, 5, and 7% revenue growth. It changes the numbers completely, but it's still overpriced. We still have a high range about 100 in the low hundreds. So it's still overpriced. That's what tells me Pepsi, I'm not touching it right now.
A lot of the super investors, Paul, we look at the stats, only of the percentage of all the portfolios of super investors is 0.4% hold Pepsi, and lots of sells in the past 6 months. So people are not loving this. But in contrast, we do love Coke, and we'll get after it right now. Coca-Cola, not to be confused by, I had the wrong ticker symbol. It's KO.
Yeah, it's KO. What'd you have?
Consolidated or something. But anyway,
okay.
go show them the 8 pillars.
So again, our 8 pillars tool. Let's pick up KO. Coca-Cola company. Let's go to the 8 pill. Oh, let's look at the chart. Max chart. Look at that. Actually, Pepsi's chart's better.
Yeah, Pepsi's is better.
Man. All right.
They both look similar from March of 2020, though.
Yeah. So here's the 8 pillars tab. Again, expensive on the 5-year PE, expensive on the price of free cash flow. They have slightly growing shares, not a ton, slightly growing. And again, a little bit more debt. So maybe the debt is something that's expected in the industry, right? So Pepsi had 8.2 or 8.3 times debt times free cash flow. Coke has 6.6, so it's a little bit lower. Revenue growth, profit growth, high return on invested capital, and cash flow growth, which is way more cash flow growth than Pepsi had. All right? So dividend here. Oh my God, Seth. What is it with these companies? 3.4% is $9 billion. Their average in the last 5 years has been 7.7, and And their last year was 11. I mean, they're eating up all their free cash flow with paying a dividend.
Wow.
And that's why when they're making acquisitions, they got to use a lot of debt.
Yeah.
Because they're eating up their cash flow to get people into their stock, maybe.
And I'm looking at their acquisition. They make a lot of acquisitions.
Do they?
Yeah.
Huh. All right, so let's do the stock analyzer tool on Coca-Cola. Oh, wow. All right, let's use the same numbers. -1, 1, and 3. Profit margin, let's do 17, 18, and 19. Free cash flow margin, let's do 18, 19, and 20. PE, 13, 15, 17, 13, 15, 17 on free cash flow. And again, the 12.5% return. So we're really comparing them very similarly.
Yeah.
Boy, this is bad.
The
The company's at $60. We're at $14 to $23 a share.
Let's make sure the folks at home understand this. You have to pay a low price to get a higher return. And so these are the prices you must pay to get 12.5 over the next 10 years, Paul, or 7?
Over the next 10 years. We did 10-year analysis. This sounds really low. And you're going to put, guys are crazy. Yeah, but again, the company is not growing. Where is their growth coming from? Okay, let's go change the growth rates again. Let's call it 3, 5, and 7% growth rates. You still have to fall in half.
Yeah.
The high end is still $30 per share. Guys, it's just math. All this is math. The present value of all future cash flows is your return on your, is what an investment's worth to you. If I were to give you $1 a year for the rest of your life, what's that worth to you today? If you're going to live 40 more years, are you willing to pay $40 for it? No. You're going to break even. You're going to lose value on your cash. Would you pay $1 for that $1 a year? Absolutely. Would you pay $100? No. That's what you're doing here, though. You're overpaying by buying the company today based on 12.5%.
What improbable numbers would you have to put in, Paul, to justify today's price?
That's a great question. In the middle range, let's just do middle. Let's just do all around the same. Let's do 10% and see where it's at. 10% growth rate. Still not there.
Jeez.
15% growth rate.
Now they're a software company.
Still not there. Still not there at 15%. 20% growth rate. Boom, finally there. So you have to basically get 17 or 18% growth for the next 10 years. Now, you might sit there and say, well, that's possible. Okay. 10 years ago, they did $47 billion in revenue. Last year, they did $37 billion. For them to do 17% a year for the next 10 years, there's $37 billion in revenue. There's $37 billion in revenue. We'd have to go to $100 billion. Possible? Sure. Probable? I don't know. If you have to make an investment so it hits a home run that hasn't been seen, then you're probably not being very smart about your investing.
Especially a company that's that big and been around for that long.
Yeah.
Yeah.
I'm passing on Pepsi and Coke both. Which one's better?
Coke.
Who's better? Well, I can't make the analogy, but the bottom line is pick every bad thing in the world where you have two options. Every election we always talk about, it's the lesser of two evils. I mean, that's what this is. Which one are you picking? I don't know. I'm avoiding both.
It's funny you're not letting your love of Coca-Cola talk you into buying it.
Look, I didn't even think about that. Guys, I'm obsessed with Coca-Cola. There's literally Coke in my veins.
Right now.
Literally right now, there's Coke in my veins. And I bring Coke Zeros in my car just so when I go to a restaurant, I can use it. It doesn't matter. I love the company. I'm not willing to overpay it.
Some people smuggle in booze. You smuggle in Coca-Cola Zero.
I literally go to a restaurant and say, just charge me for the Coke. Just charge me for the drink.
That's what he does.
I'll just drink my Coke Zero.
He goes in, says, give me a cup of ice and charge me for it.
I don't care. I'm there to enjoy my meal. And Coke Zero makes me enjoy my meal.
If looking at these numbers speaks to you, for the 400 new subscribers we get on the daily, we welcome you in. And if this speaks to you, you can have our software on your phone right now. You can join the community. Paul, tell them how.
So guys, we created a software because our users were sitting there saying, how do we analyze stocks without waiting for you to make a video? There are 10,000 stocks out there. They wanted to analyze them themselves. So we made our software. We spent hundreds of thousands of dollars. You get all of this. You get everything you've seen so far, the 8 pillars tool, retirement calculator, stock analyzer, 8-pillar portfolio, exclusive video content. Every single day we post 1 to 3 videos made by us only for our users. You get all of this. You get everything on the phone app, like Seth said. But most importantly, if you feel alone, you get the community of over 6,000 people who use the software every single day to talk about your investment ideas. Because you might be the only one of your friends who believes these thoughts. You can't talk to them. You go into the chat right here in the top right corner or on your mobile phone and talk every day about every investment idea you have. This is all for only $1 per day. Whatever price you pay, you are locked in forever. $1 per day gets you everything here. 30 years of financial data. This is a no-brainer, guys. Our competitors are $199 to $500 a month. $1 per day gets you this software. Go sign up now. 2 ways to sign up. Everythingmoney.com or Patreon. The benefits of everythingmoney.com is you don't pay sales tax yet because we're not big enough. Sign up $1 per day.
And if you're looking to trade Coke or Pepsi, there might be a bump, Mo, around the Super Bowl. I mean, obviously they're going to spend $1 gazillion on Snoop Dogg pushing Pepsi in the Super Bowl. Tell us how to trade this, baby. Oh, it's overbought. I can see it from here.
It's overbought. It's at all-time highs. So this is Pepsi. Overbought area. So what I would tell you to do, you've heard me say this many times, if you get a breakout to a new all-time high with an engulfing candlestick, with good volume coming in, you can go for this and continue your position. But remember, this overbought area, this can continue for months and months and months, and it could just turn into a power stock. I bet this is a power stock right now. Let me see if it's over all 4 major moving averages, and it is. So if you get an all-time high, what a power stock is, the stock that's hitting all-time highs or 52-week highs over all 4 major moving averages. That's happening right now with Pepsi. Break out to a new all-time high, and you have another power stock. So just pay attention to the volume. See if you break out to these all-time highs once again. Coke, same situation. They're almost the exact same chart, Seth. Let's pull up this one. I mean, this one is a little bit steeper. It's had some kind of run in the past couple of weeks, but here's the problem. You have a lot of gaps to fill around here. So you do have that negative sentiment. If I were from a trading perspective, I would probably be more apt to say go after Pepsi, just because you do have this negativity pushing. It looks like your red line is maybe about to cross over and come down, but it could happen. This could just break out to new all-time highs. This could go sideways for a long time. But if I had to pick right now from a long-term perspective or daily perspective, it's Pepsi right now. And from a day trading side, guys, on Coke and Pepsi, the betas, which means the volatility on the stock, are about 0.7. So if the market, which is S&P, SPY, moves 1, you want to look for stocks that have a beta of maybe 2 that give you that increased volatility. This is 0.7, so it moves even slower than the entire market. So this is not a good stocks that are conducive for day trading. So if you want to learn these rules, come and join me in the Bid and Ask Nation. You get the Trading 101 series, which is all of the rules that you need to be successful. The Employed Trader series, which is 6 stocks that I update you on every single day. Exclusive Saturday seminars, 1 Saturday per month. I do an open Q&A session to the Bid and Ask Nation and a chat community of 1,000+ people that all have the same goals as you. Come and join me.
That is our take on Coke versus Pepsi. We will keep you updated in the future. Paul, just looking at the numbers from historically, can't imagine any time you're going to be in love with either of these companies moving forward. I mean,
they fall big time. Sure, I will. I mean, look at Coke. Coke was at $50-some and fell. Oh, look at the max chart. It was at
$38 in COVID.
43 and then fell down to 20 just 5 years later. Okay. Fell by over half. Okay. At that point, I'm pretty interested.
So we'll be waiting patiently like value investors do. That's our take. Fondle, thumbs up. We'll see you next video.